Yeah, I'm really pleased to introduce our guest, Peter Cowley, who is a Cambridge-based serial tech entrepreneur and angel investor. He's the president of the European Business Angel Network, EBAN, was UK Business Angel of the Year, and is also a mentor and the non-executive director and a father too. He has a keen interest in improving the journeys of startups by educating angels and entrepreneurs to make fewer mistakes, work better together, and produce more successful exits. With his younger son, he has also launched a set of informative online and offline platforms called The Invested Investor. So great to have you here with us, Peter.
Yeah, thanks very much, Mark.
Yeah, first point, would you just like to give us a kind of an overview on anything in your background that I didn't cover in the intro there?
Yeah, no, I'll just give a few numbers really. So yeah, engineering, computer science at uni a long time ago, a bit of corporate life in London, moved to Bavaria, set up my first business there, in tech business. This was in 1981. Came back to the UK and I've founded or co-founded 14 businesses in tech, property, some mostly B2B, some B2C, some B2B2C. So I've quite a lot of entrepreneurial experience. Still have two businesses, CamData, which is a tech business that's 36 years old, and two books, Invested Investor. Moved into angel investing about a dozen years ago by investing in somebody I was mentoring here in Cambridge, who'd done the same course as me, computer science. Sold that fairly quickly, and luckily, not luckily because it was needed to exit, it was just, I had a good multiple to a software company here in Cambridge, and then joined the Cambridge Angels, and so I've learned everything really from being involved with them. So, and on the way, I got noticed by a few people, as you mentioned, and which is why I was I'm on the Angel Co-Fund Investment Committee. I was Angel of the Year. I was on the UK BEA board. I'm on the EBAN board, etc. So I know I've got a very broad experience of both being an entrepreneur and investing. I've invested in over 70 companies, of which I've had 13 failures and 9 successes. It's all on my website, petercowley.org, all my criteria, all my failures, etc. So I try to be as transparent as I can possibly be. So
it sounds like quite a good ratio. I hear that often sort of 1 in 10 is kind of normal for
No, it's not. No, that I must correct that, because that is wrong, because otherwise, you know, whoever's an entrepreneur out there will think, why do I bother? No, it's not as bad as that. If you don't take external investment, you've got a good chance, probably 1 in 2 that'll fail after 5 years. If you do take external investment, it's probably 3 in 4, you know, something like 70–75%. So it's about a quarter will actually succeed in a way that's either sustainability or an exit of some form at some point. And the 1 in 10 is the good return. So 1 in 10, you might get a 4 or 5 times return on that, or more. I had 100 times return, you know, lots of luck there. And then the other ones, the 2 or 3, will be a sort of getting your money back times 1 or 2 or something like that. So overall, we work on, and who knows whether this statistic is right or not, 20–25% return per year on money employed, used by angels. But this is based on a decent sized portfolio of at least 25 companies. And an angel, it's tough to invest in 25 companies over time, and to use time, this is over a 10 or 15 year period before you'll start to get that sort of return. I do it for fun, basically. I don't do it necessarily as an asset class.
Cool. I think that's the best way to do anything, isn't it? Something that you enjoy, and then if you can make a living from that. That's really interesting to hear that you got into angel investment through your mentor relationship, which is kind of another good example of why mentoring or being mentored can be an excellent experience to have. So I think we've already answered our second question, so I'll go right on to the next one. So that is, what are you looking for in a business when deciding to invest?
Very early business. It took me about 3 or 4 years to work this out, and I made some quite big mistakes in those first few years. But early stage investing, before there's any revenue generally or whatever, there's only one thing that matters, and that's the people. The plan itself the chance of the planet itself surviving the test of time and competition and technology and all the rest of it is pretty low. Everybody generally will pivot in some way, if it's a small pivot or even a huge pivot in some cases. So it comes down to purely the people. So I've done this. I've done some studies actually with UEA. Actually, there was somebody doing some research there where I was given a couple of business plans, and I'd rejected one of the plans before I even found out what they were doing. I just looked at the team and the advisors and rejected it, and I have no clue what it was. It's something to do with renewable energy, as it turned out. Was the other one I went further down. So I because of years of experience in this sort of thing, I'm not always right, of course, but it does mean I can work out from the background, and this is just something on paper. Of course, once it's got past that part of the filter, then it's a matter of interacting with the entrepreneurs. So it comes down to people. I, as an investor, am investing not in a plan, though there must be some plan, because I'm going to give you some money as an entrepreneur and you're going to use it. I'm investing in you and your co-founders, and there's got to be at least two, well, very occasionally one, never four, sometimes three. It's you as the team and how you interact, the two or three of you, that I invest in.
Okay. So yeah, that's an interesting point about the 2, 3, but not 4. Could you go a bit further into the reasoning behind that, please?
Yeah, just so, first of all, the interaction between two people is worth much more than two separate individuals, because of the way they'll work together and solve problems and cope with the stresses and strains. A single entrepreneur, and I have backed a few at single ones. My average over the 150 entrepreneurs and 70 businesses is 1.9 something. So I'm definitely occasionally investing in a single entrepreneur, mostly early days, and some of those are still going. So the problem with 4, and they're always exceptions, of course. You take the Bransons of these world, or the Alan Sugars, and they've built businesses, or Body Shop, etc. They built businesses as single founders. The problem with 4 is they soon become 3. And there's a business I didn't invest in here in Cambridge was 4, became 3 within a year and a half, and became 2 about 4 years later. This just becomes a disconnect sometimes, and it can be because of personal reasons, or it can become strategic reasons, or whatever. And losing any founder at any point in the journey is really tough for everybody. So it's better, in my view and my experience, to be 3 or 2. And 3 is better than 2 somewhat, but again, 3, if everybody wants a life-changing amount out of it, it means the pie, i.e. the valuation of the business at the beginning, is that little bit bigger to accommodate that. So yeah, that's right.
So does it make things difficult if a founder leaves because they've got shares in the company, but then they're not working on it anymore, and you need to kind of figure out?
Yes, there'll be an emotional issue because they're leaving because they can't cope, and that will have been shown for some time. Or worse, you decide to get rid of them for some reason, and then you have to negotiate them out. So whether it's driven by the entrepreneur or driven by the other entrepreneurs, the other founders, there are ways of ensuring that that's not so painful in terms of ownership in the first 3 years. So we use something called reverse vesting, where if I invest in your business, actually you own none of it the day after we invest, and you earn it back again, which sounds horrendous, of course. But once I explain that you and your co-founder, if the other co-founder leaves, you would be pretty pissed off about it. They're also owning it. So it means if they haven't vested the shares over a period, usually 3 years, maybe 4, then those shares can be used to find some senior leadership team members, etc., etc. So yes, in terms of share, but if it happens after the 3 or 4 years, then you've got to accept that person has contributed a huge amount for the first 3 or 4 years, and therefore they deserve whatever share they have. And Paul Allen and Bill Gates is a great example there, where Paul Allen walked away from Microsoft because of illness after about 5 or 6 years, and ended up being worth 30 billion. And it was said that Bill and Paul tried to do a deal on the ownership, didn't manage to do it, so Paul still had his shares and went on to, unfortunately he died a couple of years ago, but quite young, but he went on to buying he bought a basketball, but baseball team, etc., etc. He had a good time, and had a big yacht.
I thought you were going to say that went differently, and he, he put in years of work and then ended up penny
No,
rich.
he obviously did put in a few years of work. So yeah,
Mm,
pretty yes, and that's also fair. I'm sure Bill Gates at no point ever regrets what he did. So
yeah. So how do you actually go about finding companies to invest in, or do you kind of rely on, do you have enough that come to you that you don't need to worry
yeah, I
about?
mean that question would be best asked me 10 years ago because I really struggled to find stuff then. But of course, I'm now fairly well known, and so this stuff does come in. But also belonging to groups, and we're incredibly lucky here in Cambridge with the Cambridge Angels, which is the most active group per angel in the whole of Europe, and I know that because of my role in Brussels. The opportunities here in Cambridge and the surrounding area. I mean, you're based in Norwich, aren't you? I think, is that right? Or
Pretty close, yeah. I'm sort of
yeah.
the Suffolk Essex border.
Oh, sorry, not the same place. No, no. Okay, sorry, I thought you were
Well,
up there.
they're a neighbour to us in Suffolk. So.
Yeah, sorry, no, I thought you were. So yeah, certainly it's a hotbed of great activity. Not necessarily after the university, but there's lots going on here in Cambridge. Much more living. If I'm talking to somebody in Ljubljana, say, I know somebody well there. That's the capital of Slovenia. You know, there's lots going on, but nothing like as much. So I basically belonging to a group of angels is the best way of getting deals in. So although I've slowed it down, I was getting about 1,500 deals a year coming in up till about a year ago, and I invest in 6 or 7. So that means you've only got a 1 in a 200 chance of actually getting investment from me. It doesn't mean if I don't invest that somebody I know might not invest, but there's a lot of filtering to do, as you can imagine.
Going back to what you said about when you disqualified a team on just from seeing them on paper, what was it about that that set a red flag for you? Was it they didn't have the right experience? Or?
Yes, exactly. Yeah, they basically had come out of one of the big accounting firms, which is okay. They've been around. They'll have seen a lot of businesses, but it's usually, in fact, not always, but very common that somebody has been involved in a service business that's solving problems and doing consultancy can morph into being a product company. And we invest in product businesses as angels, so because they scale with the technology rather than scaling with the number of people. And it was just looking at their CVs, I just didn't feel that they would be able to build a technology business. I mean, obviously they probably have done, and I may have missed out, and I may have missed out big. But when you've got to throw away 199 out of over 200, you've got to start somewhere.
Mm-hmm. Definitely. So do you have any advice for companies finding investors with relevant interests? Would you say like contacting an angel group is probably the best way to get started?
If there's one in your area, and of course there are about 70 around the UK, and some areas haven't got them at all. But the best way isn't a cold way in. The best way in is a warm way in. So it's actually better to reach out to a member of the group if you can find out who they are and get to know them, so they'll lead it in. It's got a much better chance. I think last year the Cambridge Angels invested in 13 new companies. We did about 40 rounds, and I think only one of them came in cold. All the rest have built a relationship with an angel first. So reaching out to some, it doesn't have to be me, and please don't come out to me always. And you're in gaming. I've only ever done one gaming investment in my whole life, so I'm not a good way into the group because I just don't do that sort of thing. So finding out, and of course this is really difficult sometimes because some angels just want to be really hidden. Some like me are very open and transparent, but most are hidden. So it is. I mean, this word hustling you might have heard, which is sort of got hijacked in the new version. I've got grey hair, so my vocabulary comes from somewhat further back. Is what any entrepreneur, or at least one of the entrepreneurial team, will need to do during the building of the business, whether that's raising equity finance, finding customers, and et cetera, et cetera. And if the entrepreneur, or at least one of the entrepreneurs, can't make contact and get somebody interested, it makes me wonder how they'll do out in the big bag world when they're actually growing the company.
Mm-hmm. Definitely. That's interesting to hear. You've got a games investment. I didn't realise that. Is that
called Frontier Developments, which you might have heard of?
Right. Wow. Yeah, that's a good one.
And we got that because David Braidman actually is a Cambridge Angel, so he came to us just before he floated. And that's a crazy story because we bought it at a price, it floated, and it collapsed below the price we bought it at, which was at a discount. Of course, since then, I was just looking yesterday, I think I bought in at, say, 90p, and the shares are worth £20 now. But I did actually sell on the way up, so I haven't any shares in it at the moment. So.
Right. Did that put you off investing in other games companies?
Well, this is a great example of why I will invest in something, because I know the people. And so I invested because it was David, and there's another David on the board that I know. And just to show that a little bit further, I've only invested in one drug discovery company, which is a molecule that works its way through the eye and repairs the retina. And there's no way do I understand how that works. I don't understand how the molecule goes through. I don't know how it understands it, repairs the retina. But the CEO is a serial founder of other companies, and the chair is a Cambridge Angel. So I was investing in people again, rather than, like, usually I like to understand the tech I'm investing in because I'm very, very geeky. But in this case, I just invested because of the people. As it turns out, and it's not in the public domain, that's at the moment doing really, really well. So
great. Cool. I guess it's good to have your area that you're interested in, but then sometimes if there's something that makes sense, for whatever reason, it's good to take a chance.
It comes down to people, as I said before. Invest in people, and that way, well, whatever any angel must do two things. One, once the check is written, you must write it off in your mind. You must expect not to get it back at all. Now, of course, we've got some tax reliefs in the UK which sweeten that slightly. But I take the view that if I've written, let's round numbers, check for my checks are bigger than this, but say £1,000, and I get £200 back. Actually, that's a bit of a win, because I expect nothing back. Obviously, I'd like my £1,000 back, and I'd like my £1,000 back times some sort of multiple. So getting something back again. So writing the check is sort of right up at that point. So.
Cool. And I guess it's a bit of a investment beginner's question, but could you just briefly go over the difference between an angel investor and a VC for us, please?
Yeah, I mean, just to quote David Gill from St John's Innovation, and he's got a great slide on this. People usually use their own savings where they can, certainly their own time, the entrepreneurs, and then they might go to a family and friends round of some form, family, friends and fools as it's sometimes called, and then they might go to angels, and then later they might go to VCs and private equity trade sale. A VC, when I write a check, I will potentially lose all that money. So I could, with that check, I could have had a holiday or bought a small car or even bought a house sometimes. Not a house in Cambridge, mind you, a house in Hull, where I come from. Whereas a VC uses somebody else's money. So they're being not lent, but they're being given money which they then invest. So they get an upside. It's called a carry, which is a profit share. They don't get a downside. So that if I lose money, I lose money, whereas a VC firm will not actually lose any of their own money. The partners might, but nobody else will. Right. What they will lose if they keep having failures is their own brand and their ability to raise again. So they look at it quite differently. So the VCs are generally much more professional. They put more effort into it, but they do write much bigger checks. And that's the thing. If you've got a company that needs a lot of capital, it's really difficult to find that angels who will continue on that journey, will continue to be able to write checks. So there are, of course, VCs that go in very early and compete or co-invest with angels, seed VCs. And there weren't many when I started a decade ago, but there's plenty of those around at the moment. But just look at them differently. An angel, the behavior is very different. I mean, one of the advantages of having angel investors, we don't tend to be as tough on founders as VCs. So if a founder's being fired, which does happen, it's almost always the VCs that do that and not the angels.
Right. That's great. Thank you for the definition. That helps a lot. And so do you think that the economic uncertainty from the pandemic will provide some good new investment opportunities, as well as, I guess, will it affect things both ways? Because I'm sure there's definitely lots of investment that won't happen because of it, but do you think it might be an opportunity for some growth as well?
I'm not sure that the question's worded quite right. The economic uncertainty is frightening. I think you mean the opportunities caused by what's going on. There will be ability to invest, but the economic uncertainty just makes it really difficult because valuations, working out what something's worth. there are definitely, I mean, I don't know why. I did it because I knew the guy, I knew the chair. I invested in a mask company. You know, the mask company is called Cambridge Mask. It's obviously not based in Cambridge, but it was started here. And they're expensive. I'm just trying to find. I haven't got one on my desk. Actually, there's one in the other room. They were doing 10,000 masks a month in January. They're doing 400,000 masks a month at the moment. So clearly, that was complete luck. It wasn't. It was a company that was really going nowhere until COVID. And his view, the entrepreneur, is a Cambridge graduate, is that, and he's right at the moment, that in the way that Far East people were wearing masks quite commonly, we in the West, and the West is obviously much bigger than the Far East, will be wearing masks in future. A horrifying thought, really, if you think about it, if we will get used to wearing masks. So clearly he's benefiting from that, and other businesses aren't. But there are also new businesses, anything to do with telemedicine, anything to do with delivery of medicine via an online platform or whatever, is also going to do well. So there will be a lot of positives, but in hospitality and all the things, I don't do anything like that. It's all really tough.
When I travelled to Japan before the lockdown, I'd noticed that lots of people there wore masks, even just if they had a cold or anything, and it seemed strange that we don't do that, but they do. But now, I think, like you say, things will have changed, and that'll be something going forward. But always seems something nice to consider it, because you're kind of doing it for other people's benefit. If you're ill, and you don't want to pass it on, even though it's probably uncomfortable to be ill and be wearing a mask like that.
Yeah, I agree.
So you've got lots of different investments. I think over 40, did you say? And
well, I've done over 70, and I've got 52 or 3 still in existence. Yeah.
Wow. Okay. So is that difficult to have enough kind of contact time? Because it's all about the people, you said. So is that kind of for the beginning stage, and then you don't get to see people so much just because of time and numbers?
Yeah, obviously that is the case. There are only so many hours in the week or the year. So I split it into 3 groups. The ones where I'm very close to them, and I'm on 9 boards, mostly as a board observer rather than a board director. I know the founders well. So that's about 15 of them. And then about another 15, I know the investor director well. So when I invest, I co-invest with others always, and I expect one of them to go on the board. So that obviously this isn't happening with COVID at the moment, but I would, because Cambridge is a small place, I'll be bumping into these people often. And the other 15 have either outgrown me, like a company called Psychology Online now, IESO, which is doing about 12 million turnover. And although I'm a shareholder, I really have little contact. Or they're ones I've basically given up with. In all cases, though, I'm on the same journey. So if they reach out to me for advice, I will answer it, but I won't be proactive with that group.
Right, that makes sense. Cool. So you mentioned on your website that you don't use any equity crowdfunding sites except Syndicate Room. What is it that's different about that?
Yeah, I must change that actually, because good point, because I do say that, and Syndicate Room are not a crowdfunding site any longer. Right. It turns out they've morphed into a fund manager. So they co-invest with people like me, active angels. So they bring the money in, and so they stop crowdfunding. So I must change that. And I know that because I've invested 7 times in that. So the reason I put it on there wasn't because of, obviously there's a conflict there with my own investment. It's because they invested, the core premise was to co-invest with angels, whereas crowdfunding generally, and particularly Crowdcube, the entrepreneur just runs it themselves. Seeders is sort of in between the two. And I only co-invest in a situation where I have representation on the board, and with Crowdcube that is very, very rare there's any representation for the shareholders.
Okay. Do you have any tips for people pitching for investment, and that might be in person, via email, or via Zoom call these days?
Well, this is a pitch from my own book. I remember I've been an entrepreneur longer than you've been alive, I suspect. Investor, written to help angels, newbie angels generally be better angels, but mostly read by entrepreneurs, because it gets into the mindset of me in this case, and there's got a lot of information about how the pitch deck should be done and how to approach and everything else. So it's available on Amazon as a book, a printed book, an audio book, and obviously on the Kindle. So yeah, do your research like anything else. You know, if you're going to approach an angel or even an angel group, work out which one. All angel groups have got some sort of web presence. So get in a warm way, if at all possible. And then tips, things like pitch deck that's used for a human presentation and one that's sent through the email are very different. So if you're actually presenting it, you shouldn't have many words on it, because, you know, we've all been through this death by PowerPoint, where somebody's presenting a PowerPoint and just reads the bloody thing out, or even if they don't read it out, you read it yourself, not listening to the person who's pitching. So that should be images and charts and so on presented. Whereas if you send it by email, there's no point in having images and charts because nobody understands what it's all about. So you need words on that one. So a number of things like that.
Cool. That's great. Thank you for that. Do you think the number of investors interested in investing in games is increasing?
Absolutely, and as you'll have seen, not just the share price of Frontier Developments, but generally, COVID has, with all the lockdown, the number of games, where I assume even board games, has gone up tremendously. So it always amazes me. I've got a very close friend who's about 15 years younger than me, who does a lot of gaming, and so he knows a huge amount of the gaming industry. And so we went walking in Newfoundland actually last year, and I learned a huge amount about it. It's a massive industry. It's obviously bigger now than Hollywood by a lot, Hollywood and Bollywood, etc., combined. And it's growing, and it's growing not because of people like me, because the only game I've ever played was called Myst with a Y. I don't know if you've ever heard of that.
Good one. Fantastic. Yeah.
Yeah, that was a long time ago. I never got through it. I couldn't. There was some sort of thing I had to open up, which I never got there. So it's not aimed at me. And that's another point. As an investor, I don't invest in anything assuming I'll ever be the customer, because if I do that, I'll get put off by things that would appeal to people of your sort of generation rather than my generation. So yeah, definitely gaming is, and it's tough though as well, isn't it? Because the requirement for a good game is huge number of thousands of, I suspect, of man-years of effort, whether it's coding or design or whatever. The tools are getting better and better, but to actually have a game that's top-end game, it's no chance for a small startup. So it'll have to be somewhere else in the gaming spectrum, assuming it's a software game and not a board game, of course.
Mm-hmm. Yeah. You do get there is more variety these days, and more people are making games for different audiences. So I just think it's a really positive thing. And also with the independent games, sometimes games made by a really small team can do really well and be unexpected success, and sell lots of copies.
Yeah, but I should just say at that point, you've just something that I don't do much B2C, almost nothing. So, and a gamer is by definition a consumer. It's not a business. The sort of number I work with is that about 1 to 6. So in terms of spend, in my view, about for every dollar you spend on the tech, you should spend $6 on marketing. Unless you've got, somehow get lucky and it goes viral, which is, you can't plan for it to happen, I don't think. You can't buy virality.
No.
So don't just think if you've got built a game and it's cost you, £50,000 or something, that it'll just get out there. You've got to spend a huge amount of effort. And I don't just mean Google AdWords or Facebook ads or whatever. I mean just, doing stuff, people getting it out there. And so don't underestimate the amount of marketing you need to do to get a consumer product into the market.
That's brilliant advice, and I think it's truer every single day, because it seems to be getting harder and harder for games to get discovered, because there's more and more games being released, so it's increasing exponentially. And so definitely that's the key. Cool. Okay, so if someone is a sole founder, do you have any suggestions on the best way for them to go about finding a good business partner?
Yeah, I mean, how many times I've been asked that? Crikey, I was doing it yesterday. There was a woman called Ruby, who's an ex-lawyer, probably in her 40s, and she's got something to do with improving warranties, with product warranties. And we spent at least half an hour trying to work out. She knew it's a tech product basically underneath. She knew she needed a co-founder, and how on earth do you find them? So there are platforms. In fact, I was talking to somebody else the other day and found one on a platform, but they'd only met, they'd only met on Zoom, not surprisingly, during lockdown. And one of the things we do when we are looking at a team is working out the dynamics of the team. And that will help a lot if those two people have known each other for some time, and particularly if they've worked together. Not necessarily if they were friends from school or something, but the trust will have been built up. But if they work together, then that will have helped. So actually finding somebody where if you're going to get external investment, where you've had long enough to build up a relationship that we can check is going to work, because it's super tough building a business. Is not easy at all. So in the end, although this it's a difficult word to use at the moment, but networking, it's just finding somebody. There are software platforms. There are lots of here in Cambridge. We've really got the other way around. We've got too many techies and not enough commercial people. But in most cases, it's the commercial people and can't find the right techie co-founder. And having an external dev team overseas is okay, but it's not having an external dev team with CTO overseas. That doesn't work at all. If it's a tech product, it needs somebody tech who's one of the founders, in my view. That's my view. Everything I've said is my view, just to point it out, because there'll always be somebody who proves I'm wrong.
I think that's always the thing with advice, isn't it? And it's how people apply it, and things change over time and different situations. But, what do you think is the best way business owners can improve their personal skills and soft skills to help their business, other than reading The Invested Investor?
Well, yeah, that word to help personal skills. I might do, I suppose. Certainly know some of the basics. I've just actually had a call yesterday with a company in the States which has got it's called Mindset, it's got a test to prove how entrepreneurial somebody is. And they've done 6,000, not in Europe. Actually, not in Europe, but they did a study for the Bahraini government, actually. And one of the questions was about intelligence. And I pointed out that they should know there's a difference, well, they did know, obviously, a difference in intellectual intelligence and emotional intelligence. And in fact, we could argue about nature-nurture amount both those, but emotional intelligence is more valuable than intellectual intelligence, in my view. And emotional intelligence, I believe, can be developed in the way you put in the question here, more than intellectual intelligence. In fact, it might be the case you can't change one, you can change the other. I'm not I'm certainly no form of expert on this. So yes, improving your emotional intelligence. And the core things that matter, certainly to me as investing, is their ability to listen, which is a level of emotional intelligence. So being a good listener is critical, because obviously not just listening to me, but listening to the surroundings, the customers, the market, the staff, and everything else. And so obviously got to be focused and passionate for a particular direction, but listen to what's going around. And the other thing that's so important is that it's a relationship of trust in the end. If you're the entrepreneur, I write you a check, I'm trusting that you will use that wisely, and you're trusting that I will behave myself and write you another check where appropriate, and I won't be a silly bugger, and I won't bully you, and I won't take too much of your time. So that trust is based on honesty generally. Most relationships is based on honesty. It certainly isn't based on the opposite of honesty. And so building that up, so being open. I mean, I often say that, in fact, it's on my website, it's my stats. I've invested in, I think half of my investments are in serial entrepreneurs. I would rather invest in a serial entrepreneur who's failed than somebody who hasn't tried already, providing that they are open and honest about the failure. Because the failure is almost certainly entrepreneur's fault. Blaming it on something else, it's very occasionally, it's a macroeconomic thing that goes wrong. Even a big bad debt is still their fault, in my view, the entrepreneurial team, because they've advanced too much credit to somebody. So being honest and open about that means an entrepreneur will then be backable. So that is probably the emotional intelligence part of it.
Okay, cool, thank you. So yeah, please, audience, ask any questions you want. So we've still got several other questions here, but yeah, just pop any questions in the Q&A section and we will go through those. So my next point was, I was wondering what do investment due diligence processes look like now, I guess before lockdown and at present, yeah, with video calls.
Yeah, I mean, let's just talk about what's happened in the last few months. Cambridge Angels does about, as I said, about one new deal a month, and we've done none during the whole process. So I've written 6 checks in the last, since March the 23rd, when the UK went into lockdown. They've all been to either existing portfolio or ones I've already been looking at. So there's no doubt, and this isn't all due to the uncertainty in what valuation should be. This is due to, as you say, the due diligence. So and human nature, you know, we've spent so long in the last few months looking at our screens, haven't we? And I can see your head. I can't, I don't know how many arms you've got or legs or whatever, but that's that doesn't really matter. There's something about the nature of getting to know somebody. Yeah. Now, I suspect that's improving now because we can meet going for a walk, we can meet in the coffee shop, etc. And once that initial meeting is happened, well, an hour and a half, going then onto Zoom or whatever, or to do due diligence is probably okay. But it's still, I struggle to work that out. If you had a co-founder and the co-founder was in a different Zoom box or Teams box or whatever, I'd still struggle to work out the dynamics between you if you weren't in the same room, because you know what it's like. The focus is there with the yellow box around it, or whatever, depending which view you're in. And so interrupting is not that easy. It's the subtle bits of body language and all the various things, because in the end we're investing in people, and we're investing in people in plural as a team, and it's their relationship that matters. So it's still going to be difficult to do due diligence even after meeting them during on Zoom.
Right. So I was next going to ask about how you start building that trust. I guess we've kind of looked at that a bit of, yeah, it's interesting to hear that you look at people's body language and between the founders and see how well they're.
And a bit more than that as well. Although it wouldn't be so important if I was a passive investor, but if I'm going to go on the board, I'd want to work out what they're like in the social environment as well, in the same way as I'd hope you would look, as an entrepreneur, which is means going out for a pizza or something, or just having a bit of fun together. So this is all part of the process of building up the trust.
Great. So we've got a question in from the audience now. So they say, I work for a biotech startup. I was surprised earlier this year when our CFO said that investors would be more assured to see manufacturing outsourced, even if it reduced near-term profitability. The rationale was that this showed that others could make the product without undue difficulty. I'm interested to know your thoughts. Thanks, Peter T.
Peter Templeton. More assured to see manufacturing outsourced. We can't switch Peter's microphone on, can we?
If I click answer live, I'm not sure what that will do. We could try it.
Peter, are you there? No, it isn't. No. Okay. Oh no, it's just gone now. But it's already been answered now. More assured to see I don't quite understand the question, because most biotechs don't do their own manufacture anyway. So I don't quite see what it means. You need GMP manufacturing capability there. No, I'm sorry, Peter. I really don't know. Somebody's dismissed the question.
Sorry, I was trying to get it back into the open. So apparently I can click on allow to speak, although because Peter hasn't signed in and it just says anonymous attendee, I'm not sure if that will.
Okay, don't worry. So let's see if I can work out a similar answer. If I can't really, because if it was a technology business, say making a medtech product or any product, a piece of Internet of Things, we wouldn't expect the manufacturing, apart from small runs, to be done in-house. We'd expect it to be outsourced. And if it was a drug discovery at the far end of the process, again, I would not expect a biotech startup, the one I mentioned earlier on, you know, they're hardly going to be manufacturing the molecule in volume
Right.
to manufacture. So near-term profitability being reduced, don't have a problem with that at all. I don't see why COVID would make any difference if this is to do with COVID.
I think I found the allow to talk button, so I can click that and see.
Oh yes, Peter, hello.
So,
hi, can you hear me?
Yeah, I can. Yes, you're a bit quiet, but try again.
Okay. No, thanks for taking the question. Just to clarify, so the product is it's an organ-on-chip system that is referring to equipment and consumables that are used by people who are developing, you know, their drug molecules and, you know, other stuff. So in a sense, this is analogous to diagnostic devices or medical devices, not with the same level of regulation. But it's essentially instruments and consumables. It was just an interesting observation. You know, we had in the early stages of our work, we had set up a little bit of, you know, pilot build internally, and it was just an interesting comment. It was pre-COVID when perhaps things were a little different, but it was just an interesting. It was counterintuitive. I would have thought the desire would have been to get the revenues and then to see, you know, reasonably quickly try to turn profitable, and the answer was no. Actually, they've got other priorities.
Yeah, yeah, exactly. When let's just answer that part of it. At what point should a business turn profitable? If the investors will continue to support, then profitability is not needed. But if the investors stop supporting, getting to break even is critical. Otherwise, you're going to go bust. So yeah, that's almost a bit of a threat there, isn't it? And hopefully it wouldn't behave badly, but to say yes, do that, carry on spending the money, and it doesn't matter about profitability, and then suddenly the investment money dries up, you're really stuck high and dry then. But that wasn't your question. I was just answering something else.
Yeah.
I honestly don't know. I mean, if I'm investing in a business that's got involved in manufacture, I would never want the business to be doing its own manufacture apart from low runs. I'd want it to be put out because any form of volume is almost certainly done better by a specialist manufacturer than one would do in-house. And I don't want my investment dollars or pounds to be used in building up a manufacturing line in the business I'd rather it was done by somebody else. So again, I'm not really quite answering the question, I'm afraid, Peter.
No, that's useful. Appreciate that. Thank you.
Thank you.
very much.
I've got another question come in from David. Do you want to take that one, Mark?
Sure, yeah. COVID has triggered a new mine of opportunities for angel investors. What part of COVID solutions are angel investors particularly looking to invest?
Yeah, thanks, David. If I was asked that question some weeks ago, and I said then, I've changed my mind now, but at that point I said I wouldn't want to invest in a business that was purely solving COVID, you know, whether it was a new form of ventilator or whatever, because we might not need that after a while. So there's a peak of some form. However, gradually it's becoming clear that even if we don't have COVID 20 or 21 or 22, the changes towards the new normal, which have been triggered by COVID, but aren't necessarily a result of ongoing COVID issues, has meant there's a whole stack of things, and I mentioned telemedicine a few minutes ago, that will be needed. And there's a lot to do with shortened supply chains, for instance, food supply chains, etc. There's a whole stack of things where the new normal, which I'm sure won't be the same as the old normal, even if it's just, you know, we won't be traveling really as much in the air, will unlock. So he says, what part of the COVID solutions? Yeah, so as I say, I don't think a lot of money, I think, was it 300 million was wasted by the UK government on ventilators that never worked, or some horrendous number like that. It was in the FT last week. But there will be stacks of things where online life applies in a way that we didn't expect it to apply. And I give an example. I rang my GP up today about something, nothing very major, and they don't want to see me, obviously. They don't even want to speak to me on the phone. They want me to email them with some data where they're going to talk by email. I would never be able to do that last year. It's exactly how I want to do it. I want this sort of thing to happen. I'm definitely very millennial in my viewpoint there. I want my relationship with my providers to be in the method of communication or media that I want to use. And in the case of email, it's asynchronous. The problem with synchronous communication, going to visit a GP, you have to get there, you have to hang around while you wait, etc., and come away again. So it can take ages. Whereas if I can send them an email and then they'll send an email back, unless it's super urgent, of course, and then you need A&E probably. But so it's adapting the systems to what I, as an individual consumer, want. So yeah, there's a whole stack of things. It won't apply to everybody. And if I was my dad, say, who unfortunately dead, he would never be able to cope with that. But you know, I'm a relatively early adopter. So no, lots and lots of exciting things coming through. Of course, there are people still. I saw a picture of a guy setting up a new airline earlier in COVID.
Wow.
It was in Austria, a new airline in Austria. No, I don't think so. I think we'd better wait and see what the aerospace industry looks like before doing that.
Yeah, I think it's definitely lockdowns changed things so much, but there's a lot that it's kind of sped up, and some things that it's changed for the better, like lots of companies who had previously been very hesitant about working from home because they thought, you know, people won't be as productive, or security issues and stuff, when they've been forced to try it. Like, a lot of those will hopefully have now realized it works really well, and will allow their staff to be a bit more flexible in future with that. I know some companies, they probably, for whatever reasons, will want to go back, but it seems a positive step forward that there's going to be a lot more.
But the investment market, there will be less capital available. I'm confident of that in the early stage, because the tax incentivized investors are going to be worried about this. You know, their property prices, which will, although they're blipping at the moment, will come down, I believe. The stock markets, I think at the moment, are too buoyant. I think the stock market hasn't factored in the global recession or depression that we're heading towards. So I think the people like me who invest, obviously we use tax incentives, but we don't invest on the basis of the tax incentives, will be fine. And in fact, there will be some pretty good deals floating around. So although I didn't answer it to David in this way, there will be a lot of rescue money required over the next year or so. And so although I don't do that, I go very early stage. I might be tempted to help situations where there's a good core business. It just needs to survive to get through something.
Mm-hmm. So next question was, what other types of fundraising do you like your potential investment candidates to have secured previously? So we mentioned friends, family and fools before. Is it kind of at that point, or do you look for other types of bootstrap?
No, I'm happy to go in as the first round. If it's a tech business, I'd quite like them to have at least looked at grants of some sort. And just recently, Innovate UK, the UK grant provider, has gone mad with just throwing cash all over the place. If there's even a sniff of some sort of COVID-related thing in there, they've been writing checks out 50k without, I believe, even monitoring it. So, because that will stop soon. That's all to do with the process of supporting the UK. Sorry, I've just forgotten the question. What was the question again? It's not on there. What was that? So what's the question?
That I asked, it was about other types of fundraising you like.
Fundraising, yeah. So family and friends money I'm not very keen on, because generally family and friends is it's like to be less sophisticated money, so the valuation might be a bit high, and having a reset evaluation in the second round doesn't suit anybody. It looks embarrassing for the entrepreneurs. It's difficult for their relationship with their family and friends. So I'd rather that was done, using their own finance, savings. If somebody's got some savings. In the old days, when I set up Camdo, so I had the second charge on my house, and I just had some debt on that, which was supported by bank underwritten by my property. And of course, property for my generation has been rather easier than it is for your generation. So effectively founders' money. So yeah, I'd rather invest where there wasn't any previous investment personally, but that doesn't apply to everybody.
Great. I've just got one more question. So if any audience members have any other ones, please pop them in the chat. Yeah, my final point was really, other than your own book, The Invested Investor, is there any other resources you would recommend at all for people to check out?
Yes, I mean, just on the books, there's 75 podcasts out there as well. It's difficult to know which ones the good ones and which aren't, but there's a whole load of information from entrepreneurs and from investors. And then there's the second book, which is called Founder to Founder, which is 100 or so entrepreneurs have quoted things, and then we've analysed what they're saying. So this is trying to again reduce the number of failures, but this is post-investment mostly. Yeah, there's tons of stuff out there. I mean, one of the things that's sort of competing with angels are accelerators, and not incubators so much, but accelerators. So getting on an accelerator or being in an incubator, if that's still possible and wanted post-COVID, is a good thing. In both cases, you're meeting other like-minded entrepreneurs, and you're meeting investors, and you're being mentored, etc. So that's definitely worth doing. And there's masses and masses online. There's almost too much. Whether it's the UKBAA, that's the trade body, the United Kingdom Business Angel Association, or the British Business Bank, or gov.uk, or blah blah blah. There's a plethora of information, but that's all obviously broadcast. That's somebody to, like my book is, to others. You probably get more from a dialogue. That's spending some time with somebody like me who's been through this sort of thing before. And it's a matter of finding and getting the bandwidth from somebody like me. So.
Great. Thanks very much. So unless we've had any audience questions come in, which it doesn't look like we have, then I think that is everything, and we're pretty close to time anyway. Thanks very much for speaking to us, Peter. It's much appreciated. And I just have a couple of bits to go through for people. So we've got a feedback form for people to fill in. So I will share that in the chat with everyone now. Or maybe Chris can, I'm not sure, I'm going to share the right link there. So I might leave it to Chris to put that out there. But, yes, and so we'd like to thank everyone who's made, there we go, so you got the link in the chat. I'd like to thank our Cratis funders, and I think, Chris, if you also want to post a link to the next talk in the chat as well, that would be great. So we'll put the video up on our webpage, and we'll have a link to all the other events on there. Thanks very much for everyone for attending, and hope to see you all next time. And thank you again, Peter.
Thank you very much, Mark. Really enjoyed it. Thank you everybody for attending. Thank you.
Cheers.
Bye. Cheers. Bye.